This is Investment Perspectives with Brad Kimes. Daily live streaming interactive featuring Mrs. Backup. Subscribe, hit the notification, smash the likes. Now, here's Backup Brad Kimes. Come on in.
Good morning, everybody out there in the XRP community. Thanks for coming back to Investment Perspectives. I'm Bradley Kimes. You can follow me on Twitter at BackupBradleyAbove here. Look, we've got some really great news from Ripple in their new latest release of Ripple Insights. I want to run this down. I know a lot of people have talked about it. I want to interject some ideas about some of the things that were mentioned in this article that came out late yesterday. So the article itself, and let me get this up so everybody can see it. Ripple Insights 2020, the year of digital assets. Let's get into this thing and talk about some of the things that are mentioned in here. First of all, there has never been a Ripple Insights article that has been this bullish, this bold ever. And I couldn't be more excited to bring it to you. So, standing on the doorstep of a new year and a new decade, it is hard to believe that the first real public engagement with digital assets began only a few short years ago in 2017. Over that year and into the next, speculators and media coverage drove wild fluctuations in interest and price, contributing to a series of both spectacular rises and precipitous falls in each. But that digital asset roller coaster ride smoothed out over the course of 2019 as speculation subsided and specialized use cases began to emerge. The utility helped demonstrate value in digital assets beyond trading and contributed to increased stability. While skeptics and critics might still view digital assets as a giant game of Jenga, just waiting for the wrong move to send all the blocks tumbling down, we here at Ripple see the future of digital assets as more like a vast set of Legos. By carefully piecing them together, it's possible to reimagine familiar worlds or create entirely new ones. Looking ahead, we believe 2020 will reveal new technologies and applications for digital assets that can lead to meaningful, tangible change across a wide range of industries. In particular, we expect three major themes to develop in this first year of the new decade that will lead to more mainstream embrace of digital assets. First, digital assets underpin consumer financial products. XRP is a digital asset custom designed to facilitate cross-border payments. A number of companies, including MoneyGram and GoLance, and applications have endorsed the use case, and we anticipate even more will join the adoptive curve over the coming year. But our team expects other digital assets and use cases to find traction in the coming year and decade. Ripple SVP, Senior VP of Product, Ashish Burla, predicts that mobile wallets will enter the blockchain and crypto industries in a big way. Specifically, he believes that adoption of digital assets and blockchain technology among mobile wallets and super apps like Gojek, Grab, and PayPal will become more mainstream as they look to expand their services to keep up with customer demand and compete with digital banks. According to Ashish, the adoption will continue expanding to include new credit and loan products, which we're already seeing on the markets. He expects that these more mainstream use cases will first emerge in developing markets like Kenya, Nigeria, and parts of Latin America, where the need is most acute. These applications will be aided by friendlier regulations towards digital assets, which will also make them more attractive to tech companies seeking paths to expansion. Now, just right in this spot here, you can see that they're talking about the expansion of mobile wallets, blockchain, and crypto industries in a big way. Getting everyone to start using and integrating on their phones, ladies and gentlemen, is where you're going to find these mobile wallets. and getting everybody acclimated into using them in some way, and then the integration of the crypto inside of those wallets. It's massive. Quickest way to get mass adoption? Social media and phones, right? Similarly, Ripple's Senior Vice President of Customer Success, Marcus Treacher, listen very carefully, sees international and micropayments expanding to facilitate new consumer uses. In particular, he envisions purchase solutions for tourists and travelers that no longer rely on cards or card rails taking root in 2020. Listen to this example. Imagine if a Japanese tourist visiting Thailand could buy goods using a mobile app or a QR code, triggering an immediate cross-border payment from their Japanese yen account to a Thai baht merchant's account. If more consumers purchase solutions start leveraging blockchain technology in the same way, the payoff will quite literally be huge. The implications not only of adoption here being huge, but also minimizing identity theft, fraud, right? Because now you're talking about no intermediary. I don't have to share my information with this merchant that I'm traveling in this area to. I hit the QR code, it comes out of my account, they get the dollars they want. Moving on. Marcus also predicts that big tech companies will continue to enter the payment space, hastening the growth of micro and wallet payments supporting immediate, low-volume payment flows. This expansion of micropayments beyond traditional messaging apps like Telegram and line-to-deep pocketed enterprises should create a resulting surge of developers flocking to digital assets. So just the mere application and companies picking this up is going to begin to create that adoption process, surging developers to want to flock to digital assets and blockchain, to want to build platforms on top of it because they see the larger companies already building it and integrating it into their models. Massive. Institutional adoption of digital assets accelerates. For digital assets and associated applications to have long-term staying power, institutional players must embrace the technology. We anticipate that just such a wave of institutional adoption will begin in 2020, with more traditional firms deploying digital asset and blockchain solutions. Breanne Madigan, our head of global institutional markets, says that this will be enabled by trusted custody brands such as State Street or Bank of New York becoming involved in digital assets. Ladies and gentlemen, we covered here on this channel a few days ago that State Street has applied for digital custody. State Street is an enormous bank. They handle at least $2 or $2.5 trillion in asset management. They are a trusted name, and they are very recognized in this space. The presence of recognized players will increase institutional confidence in the space and pave the way for greater institutional adoption next year, explains Breanne. These are massive, massive, bold statements, ladies and gentlemen, and this one is the biggest of them all. CEO Brad Garlinghouse is even bolder, predicting that half of the top 20 biggest banks in the world will actively hold and trade digital assets in 2020. Boom. That is one hell of a statement. Anyone who understands this company, Ripple, and Brad Garlinghouse and this entire staff knows that they underpromise and overdeliver. And if they're telling you that this is what they see happening, it probably will be even bigger than what they're suggesting here, is what my take is. He is also one of many on the team that believes fiat currencies will go digital in the next year. I take you now back to a thought of the video at the conference where Brad Garlinghouse is sitting on stage with the lawyer from the IMF, discussing that a country would have to adopt a digital currency in order for the IMF to get into the game. Remember that little talk? While Senior Vice President of Spring, Ethan Beard, shout out to Ethan, expects at least one central bank to launch a tokenized representation of their fiat currency in 2020. Brad forecast at least one non-G20 currency, like the Argentine peso or similar, will become fully digitized within the next year. Smells like the IMF getting into the pool is not too far from here. The crypto industry evolves to keep pace. This expanded adoption of digital currencies by mainstream and national institutions will also have an impact on the industry, supporting the technology specifically. Ashish and Brianne both expect it to produce a wave of consolidation amongst crypto exchanges. Let's stop right here. We have talked about the fact of the maturation of this digital asset space and about how there's an enormous amount of exchanges out here. I pointed earlier about how Charles Schwab is to acquire TD Ameritrade, which has ErisX, the digital platform. Why build it if you could just acquire it, right? The reality is that in lieu of the regulation compliance standards that have been put out by the FATF, some of these exchanges cannot live up to those compliances and standards, especially on the heels of a nuclear bear market that we've been in for so long. Brianne sees consolidation being driven by being driven more by the interest in digital assets and blockchain from institutional brands, larger companies coming in and setting up shop. She predicts an increased focus on true volumes. That's an important statement. True volumes. Subdued retail interest in exchanges. Well, now, why would that be? Why would there be a subdued retail interest in exchanges? Maybe because banks and institutional companies from the traditional markets are moving in, and they would be a more trusted place to acquire and custody your digital assets. And the appearance of more institutional grade exchanges. Now that's a massive statement too. More institutional grade exchanges. Big money coming in to accommodate big institutional investment will combine to spark a wave of consolidation as companies compete to add volume and customers. This market is about to explode, ladies and gentlemen. Beyond exchanges, Brad expects to see consolidation amongst crypto companies themselves. He boiled it down to a simple numbers game. The world doesn't need 2,000 plus digital assets. While I don't think there will be one coin to rule them all, it's clear that if an asset doesn't have a proven use case beyond speculation, it's not going to survive. This year saw the start of a shuttering of number crypto companies that Brad expects to continue into 2020. A crypto pump ? This is important. These three evolving trends will together likely fuel what Brianne Madigan calls the next major pump for the digital asset market. Ladies and gentlemen, these people do not speak this way if they cannot deliver and over-deliver. Keep this in mind. She projects that the growing institutional comfort level with digital asset use cases, along with increased regulatory clarity in the U.S. and the next Bitcoin halving by May of 2020, will all lead to the next large adoption cycle. That boost could be aided by what Ethan Beard terms a flight to crypto as the safer asset class in the face of a potential global economic slowdown. Now, you know we have been covering the traditional markets and the economy as we watch our investments in the space of the digital asset space grow. We certainly have talked, I know my co-host Cryptopolis and I on Fridays have talked numerous occasions about the convergence of the traditional and the digital asset space coming together. That convergence is being talked about right here as it happening in 2020. And lest anyone forget about Libra, 'tis not true. Multiple team members chimed in to predict that Libra will neither launch nor be canceled in 2020. They expect that increased regulatory scrutiny, privacy concerns, and the defection of key association members will combine to at least temporarily stall Facebook's plan for the digital asset. Ultimately, the coming year and decade will see digital assets and blockchain continue to emerge as core underpinnings of the world's financial future. Today's first movers will have an enormous role to play in delivering that change for tomorrow. We are excited to watch it unfold. And I must add, so am I. Ladies and gentlemen, this is the moment that I have been personally waiting for, and I know a lot of you have too. This company and everyone in it are brilliant and very, very calculated in what they do. They are not talking from the hip here. That's what's important to remember. These are the kind of people that underpromise and overdeliver. And that is exactly what we are going to see as we move into 2020. I certainly believe it. I couldn't be more excited about my investment and the time that I've spent learning about Ripple and every one of the people that make that company what it is. This is an exciting moment in our lives. We are witnessing the greatest financial paradigm shift in the history of mankind unfold right before us. And it cannot be overstated. All right, guys, leave a comment below, hit the like and subscribe. This is an amazing moment. And do not forget to check out my next video that I'm about to put out that goes hand in hand and in tandem with this moment with Ripple, because it's about regulation and a new act that's been proposed to Congress. And you're going to want to know about it because it defines cryptocurrencies into 3 categories. I will catch you on the next one. See you soon.